What if I told you that one single indicator, used correctly, can dramatically improve your intraday trading decisions? No complicated formulas, no confusing setups. Just one powerful tool that professional traders rely on every single day. Today, we're going to talk about the Exponential Moving Average, or EMA, and how you can use it to trade smarter in intraday markets. So if you're tired of guessing entries and exits, stick around, because by the end of this video, you'll have a clear, actionable strategy to apply right away. What is EMA? Before we dive into the strategy, let's quickly understand what the EMA actually is. The Exponential Moving Average is a type of moving average that gives more weight to recent price data. Unlike the simple moving average, which treats all data points equally, the EMA reacts faster to price changes. That responsiveness is exactly why intraday traders love it. In a fast-moving market where every second counts, you need an indicator that keeps up with price action, and the EMA does exactly that. The most commonly used EMAs for intraday trading are the 9 EMA, the 20 EMA, and the 50 EMA, and today we'll focus on how to combine two of them for a powerful crossover strategy. EMA crossover strategy. Here's the core strategy you need to understand. We're going to use two EMAs together, the 9 EMA and the 20 EMA, plotted on a 5-minute or 15-minute chart. The idea is simple. When the faster EMA, which is the 9 EMA, crosses above the slower EMA, the 20 EMA, it signals that bullish momentum is building, and that's your potential buy signal. On the flip side, when the 9 EMA crosses below the 20 EMA, it signals bearish momentum, and that's your potential sell or short signal. Now, I want to be clear. No indicator works in isolation. What we're looking for is not just a crossover, but a crossover that is confirmed by momentum and price action. Always wait for the candle to close before taking any trade, so you avoid false signals and premature entries. How to enter and exit trades. Let's talk about entries and exits. When you see a bullish crossover, the 9 EMA crossing above the 20 EMA, wait for the next candle to open and then enter the trade. Your stop loss should be placed just below the recent swing low or below the 20 EMA, whichever is closer. For your target, aim for at least a 1-to-2 risk-to-reward ratio. So if your stop loss is 20 points away, your target should be at least 40 points. For a bearish crossover, the logic is reversed. Enter after the crossover is confirmed, place your stop loss above the recent swing high, and aim for a clean 1-to-2 or better ratio. The key here is discipline. Stick to your stop loss no matter what. Intraday trading is a game of probabilities, and protecting your capital is always the priority. Pro tips and filters. Now here are a few pro tips that will make this strategy even more effective. First, always trade in the direction of the overall trend. If the market is in a strong uptrend on the higher time frame, focus only on buying opportunities on the lower time frame. Fighting the trend is one of the most common mistakes beginners make. Second, avoid trading during the first 15 minutes of the market open, as volatility is extremely unpredictable during that window. Third, combine the EMA crossover with volume confirmation. A crossover accompanied by high volume is far more reliable than one that happens with thin volume. And finally, use the 50 EMA as your trend filter. If the price is above the 50 EMA, look for buy setups only. And if it's below, look for sell setups only. This simple filter alone can significantly improve your win rate. The EMA crossover strategy is simple, clean, and time-tested. But remember, simplicity is a strength in trading, not a weakness. The traders who consistently make money aren't the ones using 10 indicators at once. They're the ones who master one or two tools and apply them with iron discipline. So start practicing this strategy on a paper trading account first. Get familiar with how the EMAs behave on your preferred instrument and time frame. Once you feel confident, you can move to live trading. If you found this video helpful, make sure to hit that like button and subscribe for more practical trading content every week. I'll see you in the next one. Happy trading and always trade safe.